This hearing will come to order. Today's hearing is a hybrid format, and the hearing room has been configured to maintain the recommended 6-foot social distancing between senators, witnesses, and other individuals in the room necessary to operate the hearing, which we have kept to a minimum. For those joining remotely, a few video conferencing reminders. Once you start speaking, there will be a slight delay before you are displayed on the screen. To minimize background noise, please click the mute button until it is your turn to speak or ask questions. If there is a technology issue, we will move to the next senator until it's resolved. I again remind all senators and our witnesses that the 5-minute clock still applies, and those of you who are remote should all have a box on your screen labeled clock that will show how much time is remaining. We'll try to give you a gavel reminder when your time is almost expired. To simplify the speaking order process, Senator Brown and I have again agreed to go by seniority for this hearing. With that, we welcome our witnesses to this hearing, the Honorable Stephen T. Mnuchin, Secretary of the Department of Treasury, and the Honorable Jerome H. Powell, Chairman of the Board of Governors of the Federal Reserve System. Welcome to both of you. Today's witnesses will provide testimony as required under Title IV of the CARES Act. Congress has appointed nearly $3 trillion, appropriated nearly $3 trillion to protect, strengthen, and support Americans, to fight the pandemic, and also to stabilize the infrastructure of our economic system. Title IV of the CARES Act provided a $454 billion infusion into the Exchange Stabilization Fund to support the Federal Reserve's 13(3) emergency lending programs and facilities that facilitate liquidity in the marketplace and support eligible businesses, states, municipalities, and tribes. So far, approximately $195 billion of funds under the Title IV CARES Act have been leveraged to provide trillions of dollars in liquidity back into the markets, supporting credit flow and helping to stabilize the economy through the primary market and secondary market corporate credit facilities, the Term Asset-Backed Securities Loan Facility, the Main Street Lending Program, and the Municipal Liquidity Facility. That leaves around $250 billion in funding remaining under Title IV of the CARES Act. There's been significant interest in exploring ways that the Main Street Lending Program, which offers financial support to smaller and medium-sized businesses and nonprofits, can be improved to expand its access and utilization. Earlier this month, the Banking Committee held a hearing on the status of 13(3) facilities where witnesses made the case and provided recommendations for the change to the terms of the Main Street Lending Program to broaden its access and use and to address commercial real estate markets. In that hearing, Hal Scott, President of the Committee on Capital Markets Regulations, shared his view that small and medium-sized businesses will need financial support for several years to recover from the impact of the COVID-19 pandemic. He continued, while our economy is improving, given the depth to which it fell, there is still a long way to go. Small business revenues continue to be well below pre-pandemic levels, and the recovery has stalled since July. A key part of this financial support should come from the Main Street program authorized by the CARES Act. In the same hearing, Jeff DeBoer, President and CEO of the Real Estate Roundtable, painted a bleak picture of the condition of the commercial real estate market. He said it is impacting their ability to meet their debt service obligations, which increases pressure on financial institutions, pension fund investors, and others. And he said it is pushing property values down to the detriment of local governments. It is causing much stress in pools for commercial mortgage-backed securities, and it is threatening to result in countless commercial property foreclosures. The situation must be addressed. In July, I sent a letter to each of you, Secretary Mnuchin and Chairman Powell, urging you to expand access to the Main Street Lending Program, including by setting up an asset-based lending program and addressing the commercial real estate market. In addition to expanding the Main Street Lending Program, there's been meaningful interest in opportunities to allocate remaining CARES Act funds. In August, House Financial Services Committee Ranking Member McHenry and I sent a letter to each of you urging you to implement the remaining funds under Title IV to work to the fullest extent, including by expanding the Main Street Lending Program to further support Main Street businesses, their workers, and the American economy. The Federal Reserve's 13(3) facilities play a critical role in strengthening the economic recovery. It's important to continually assess what areas of the economy and financial markets continue to be in need of support and identify options for providing additional needed support, whether through expanding existing facilities or creating new facilities. In July, I sent a letter to the federal banking regulators, urging each of them to extend and expand critical CARES Act relief where there is discretion, including relief from the community bank leverage ratio to at least December 31, 2021, the troubled debt restructurings to at least January 1, 2022, and the current expected credit losses, or CECL, to at least January 1, 2023. Since that letter, I've heard additional concerns from both banks and credit unions. Not only have banks and credit unions experienced a significant inflow of deposits during this pandemic, but Congress also has tasked them with supporting the economy, particularly through the Paycheck Protection Program. Their role and these unique circumstances threaten to cause key regulatory thresholds to be breached and a ratcheting up of regulation that would otherwise not occur that could keep them on the sidelines. The regulatory framework should account for these unique circumstances and enable banks and credit unions to continue supporting the recovery. Title IV also contains robust oversight provisions. Section 4026 is what brings us here today, and it also established the Congressional Oversight Commission, which has held 2 public hearings and issued 4 reports to date, and the Special Inspector General for Pandemic Recovery, who has to date issued 1 report and continues his important work. During today's hearing, I look forward to hearing how the financial resources provided under the CARES Act have benefited the American people and the economy, an update on the status of the 13(3) emergency facilities, including an assessment of the opportunities for and need to expand the Main Street Lending Program, steps the Fed and Treasury have taken and will continue to take to provide transparency into the loans, loan guarantees, and other investments under the CARES Act, opportunities to utilize any remaining funds of the CARES Act to provide financial support and additional liquidity to the economy, and opportunities to tailor the regulatory framework to account for the unique circumstances of the pandemic and role of the financial institutions, and whether congressional action is needed. Although there have been positive economic signs in recent months, Americans continue to struggle with and feel the effects of the COVID-19 pandemic and still need relief. Unfortunately, Republicans' repeated efforts to deliver targeted relief in areas where we can agree has been rebuffed by the Democrats. Negotiating toward a realistic package that can actually get passed and signed into law would best serve the American people during this difficult time. I appreciate the work of both Secretary Mnuchin and Chairman Powell in response to this horrible pandemic to support financial markets, businesses, and the economy. Thank you again to each of you for joining the committee today. Senator Brown, are you with us?
I am, Mr. Chairman, thank you. It's a pleasure to be here again. I'm disappointed this hearing wasn't held fully remote. I'm glad to see masks in the hearing room. Chair Powell, I want to thank you for your leadership in calling for a national mask mandate, something no other Republican I'm aware of has done. I know many of my colleagues, Republicans and Democrats, cringe when they see these Trump rallies, when they see people packed together shouting, not wearing masks. We should be trying, elected officials from the president to the rest of us, should be trying to stop this virus, not spread it. Today, there are more people out of work than there were during the 2008 financial crisis, but you wouldn't know it from the way President Trump and Secretary Mnuchin act, as if we are through this crisis and well on the road to recovery. That's what happens when you measure the health of the economy only through the stock market. There continue to be about 1,000 deaths per day from the coronavirus. That doesn't show up in corporate quarterly earnings reports, apparently. In 22 states, coronavirus cases are surging rather than receding, and scientists and public health experts predict it will only get worse as fall and winter begin. Families are under unbearable stress. Most of my colleagues know that. Most of you have children and grandchildren, trying to either educate their kids at home or worrying as schools open without sufficient plans to protect children and teachers and cafeteria workers and security guards and custodians. That doesn't even include our sons and daughters at college, the risk they face at colleges and universities. You wouldn't know any of that if you looked at corporate profit forecasts. The president and this administration continue to act like everything is business as usual, because for them it is. The coronavirus isn't really affecting them or their wealthy friends or their comfortable jobs. CEOs aren't the people working the cash registers or cleaning hospital beds. They aren't risking their lives every day to keep food on the table. Most CEOs don't live in the neighborhoods where Black and minority-owned restaurants and businesses are shutting down. Think for a moment, all of us should think for a moment of the anxiety of an essential worker, the stress she faces. Think about coming home at night worried you might have picked up the virus at work and you might be exposing your children and your family. Cleveland's a pretty good barometer of where the country is heading. Long before the Great Recession, our trade and tax policy essentially abandoned the industrial Midwest. Communities watched factory after factory close with no plan to rebuild our local economies. Entire neighborhoods, entire towns hollowed out. My zip code 44105 in Cleveland had the most foreclosures in the United States at the beginning of 2007. By the next year, thousands of cities across the country were suffering. Millions of families lost their homes. The story of our zip code became the story of the whole country because the government took care of Wall Street. It took care of the biggest banks. It failed to take care of everybody else.
Thanks, Seth.
Just 10 years later, we have yet another crisis where Cleveland is a harbinger of what's happening across the country. ProPublica illustrated it pretty well recently. They covered a big company called TransDigm that has offices in downtown Cleveland. TransDigm's gotten plenty of help from taxpayers to get through this pandemic. The company's borrowing money at record low interest rates. It's collecting yet more tax breaks, while at the same time it's laying off its workers. 3,000 workers in Cleveland are going to lose their jobs during the pandemic while the company's executives keep making money. The CEO of TransDigm, the chairman, made at last count $60 million a year. And this is happening all around the country. Government help's readily available for big corporations, while small businesses struggle to survive and workers are on their own. Millions have lost jobs at the beginning of August. 600,000 workers in my state, millions across the country lost their $600 a week unemployment insurance payment because this president and my Republican colleagues allowed it to expire. The $600 a week kept more than 12 million people out of poverty. What are these families to do? How are they going to make rent or their mortgage payment on October 1st? You can't tell them, oh, just go out and get a job. There are no jobs because the president hasn't controlled the virus. Millions of people are stuck inside their homes or separated from loved ones to stay safe, trying to avoid contacting this disease. Black and brown communities, including Native American tribes, have been hit the hardest by the pandemic, still don't have equal access to the Federal Reserve lending facilities or PPP loans. We know it would not have been this bad if back in February and March, the President of the United States had done his job. We all know that, Republicans and Democrats alike. We weren't shocked by the quotations of the president and the discussion of the president when he talked to the Washington Post reporter. But imagine if the president, instead of lying to us, the president treated the American people like adults and leveled with us. Imagine if he'd worn a mask, the president had worn a mask and practiced social distancing. Imagine if he had a real plan to mobilize all of America's vast ingenuity to scale up production of tests and contact tracing and protective personal equipment. More small businesses will be open right now. Our children would be back in school safely. Almost all of them. Workers would still have their jobs, and tens and tens and tens of thousands of grandparents would still be alive. We know that. And now Americans are watching the stock market surge, and then the president and his economic advisors saying the economy's just great. They're wondering what great economy they are talking about. The Ohioans I talk to and anyone who understands economics No, workers are the foundation of our economy. They know all too well what happens when you let Wall Street run things and ignore main streets across the country. Ohioans have watched for decades as factories closed, investment dried up, storefronts were boarded over, and communities that once were thriving. They know what it's like to wake up one day and realize the only jobs to be had are at a big box chain for rock bottom wages with no health care, no paid sick leaves, and no power over your schedule. These Ohio workers know what it's like to be treated as expendable by large corporations and too often by this government. And remember, as Ohio goes, so goes the nation. Americans are waking up and realizing they have a president who thinks much of the country is expendable. I know not everyone in government feels that way. The chairman of the Fed has said over and over that we need more action from Congress, more money to unemployed workers, more money for schools, more money to help families with their rent and mortgage. In short, we need the government to actually lead and use our country's vast resources to avoid a catastrophic recession. In our last hearing in this committee, all the expert witnesses, the one chosen by the minority, the two chosen by the majority, they all agreed on one thing: people need their government to actually step in to support our families, something the Senate majority has failed to do. It seems the only people that aren't getting this message, that we need government to step up in a big way for unemployed workers, for emergency rental assistance, to open our schools safely to local governments, the Postal Service, the elections. It seems the only people who aren't getting that message are President Trump, Secretary Mnuchin, sitting in front of us today, and Republican senators scattered around the room. It's not as if Republicans are not capable of taking action. Mitch McConnell moves heaven and earth to do huge favors for big corporations. Look at the tax giveaway. We spent $2 trillion making the richest people in our country richer. The president promised to grow the economy. It didn't. He promised it would pay for itself. Not even close. He promised it would mean workers got a $4,000 raise. None of that happened. It was incredibly unpopular, but McConnell got all his Republican senators, he always does, to vote for it. Trump wanted it, then McConnell wants it, then the entire Senate Republican caucus wants it. Senator McConnell's made sure Trump's corporate judges are approved. He's bent over backwards to stack a Supreme Court that will gut the Affordable Care Act, rip away protections for pre-existing conditions. Almost half the people in my state have a pre-existing condition, and always side with corporations over workers. And now we know he's even willing to reverse his own position to confirm yet another Supreme Court justice. When it comes to doing the bidding of Wall Street and the wealthy, Mitch McConnell can whip the Senate into action. He thinks everything else can wait. Most Americans can't afford, Mr. Chairman, to wait any longer. We're up against a global health crisis that will spiral into a global economic crisis unless we act now. We face a challenge that requires this government to be at its best, to work together to do big things. We need an economic rescue package for everyone, help to keep families in their homes, to protect workers in their jobs, keep seniors and veterans and students who are at risk, give them help. We need it fast. Democrats are ready to meet this moment. House Democrats passed the HEROES Act 5 months ago. President Trump, Senate Republicans move heaven and earth to help Wall Street and their wealthy friends. When will they be ready to do the same for everyone else?
We will now move to the testimony of our witnesses. Secretary Mnuchin, you may go first. Please proceed.
Can you hear me, Chairman Crapo? Yes.
It's on now.
Chairman Crapo, Ranking Member Brown, and members of the committee, I am pleased to join you today to discuss the critical steps that the Department of Treasury and the Federal Reserve have taken over the last 6 months to provide economic relief to the American people, as well as to provide liquidity to the credit markets, business, and households. We are fully committed to getting every American back to work as quickly as possible. America is in the midst of the fastest economic recovery from any crisis in U.S. history. The August jobs report showed that the economy had gained back 10.6 million jobs, nearly 50% of the jobs lost due to the pandemic. The unemployment rate reduced to 8.4%, a notable achievement considering some people had expected as high as 25%. Thanks to the programs provided by the CARES Act, we never got close to that figure. I believe we will see a strong third quarter growth fueled by strong retail sales, housing starts, existing home sales, manufacturing growth, increased business activity. The Blue Chip Survey projection for third quarter GDP is 24%. The recovery has been strong because the administration and Congress worked together on a bipartisan basis to deliver the largest economic relief package in American history. The Federal Reserve has been instrumental to the recovery by implementing 13 unique 13(3) lending facilities. Economic reopenings combined with the CARES Act have enabled a remarkable economic rebound, but some industries, particularly hard hit by the pandemic, do require more relief. The President and I remain committed to providing support for American workers and business. We continue to work with Congress on a bipartisan basis to pass a Phase 4 relief package. I believe a targeted package is still needed, and the administration is ready to reach a bipartisan agreement. I would also encourage the Senate to pass promptly the bipartisan continuing resolution that was passed in the House. Treasury has been working hard to implement the CARES Act with transparency and accountability. We released a significant amount of information to the public on our website, treasury.gov, and usaspending.gov. We've released more information than is required by the statute. The Federal Reserve has also posted information on its website regarding the lending facilities. We have provided regular updates to Congress, this marking my 7th appearance before Congress for CARES Act hearings. Additionally, we are cooperating with various oversight bodies, including the new Inspector General, the Treasury Inspector General, the Treasury Inspector General for Tax, the new Congressional Oversight Commission, and the GAO. We appreciate Congress's interest in these issues and have devoted significant resources to inquiries. We remain committed to working with you to accommodate Congress's legislative needs and the whole of government approach to defeat COVID-19. I'd like to thank the members of this committee for working with us to provide critical economic support to the American people. Thank you.
Thank you, Mr. Secretary. Chairman Powell.
Thank you. Chairman Crapo, Ranking Member Brown, and other members of the committee, thank you for the opportunity to update you on our ongoing measures to address the hardship wrought by the pandemic. The Federal Reserve, along with others across government, is working to alleviate the economic fallout. We remain committed to using our tools to do what we can for as long as it takes to ensure that the recovery will be as strong as possible and to limit lasting damage to the economy. Economic activity has picked up from its depressed second quarter level when much of the economy was shut down to stem the spread of the virus. Many economic indicators show marked improvement. Household spending looks to have recovered about 3/4 of its earlier decline, likely owing in part to federal stimulus payments and expanded unemployment benefits. The housing sector has rebounded, and business fixed investment shows signs of improvement. In the labor market, roughly half of the 22 million payroll jobs that were lost in March and April have been regained as people return to work. Both employment and overall economic activity, however, remain well below their pre-pandemic levels, and the path ahead continues to be highly uncertain. The downturn has not fallen equally on all Americans. Those least able to bear the burden have been most affected. The rise in joblessness has been especially severe for lower wage workers, for women, and for African Americans and Hispanics. This reversal of economic fortune has upended many lives and created great uncertainty about the future. A full recovery is likely to come only when people are confident that it is safe to re-engage in a broad range of activities. The path forward will depend on keeping the virus under control and on policy actions taken at all levels of government. Since mid-March, we have taken forceful action, implementing a policy of near-zero rates, increasing asset holdings, and standing up 13 emergency lending facilities. We took these measures to support broader financial conditions and more directly to support the flow of credit to households, businesses of all sizes, and state and local governments. Our actions, taken together, have helped unlock more than $1 trillion of funding, which in turn has helped keep organizations from shuttering, putting them in a better position to keep workers on and to hire them back as the economy continues to recover. The Main Street Lending Program has been of significant interest to this committee and to the public. Many of the businesses affected by the pandemic are smaller firms that rely on banks for loans rather than public credit markets. Main Street is designed to facilitate the flow of credit to small and medium-sized businesses. In establishing the facility, we conducted extensive outreach, soliciting public comment and holding in-depth discussions with lenders and borrowers of all sizes. In response to feedback, we have continued to make adjustments to Main Street to provide greater support to small and medium-sized businesses and to nonprofit organizations such as educational institutions, hospitals, and social service organizations. Nearly 600 banks, representing well more than half of the assets in the banking system, have either completed registration or are in the process of doing so. About 230 loans totaling roughly $2 billion are either funded or in the pipeline. Main Street is intended for businesses that were on a sound footing pre-pandemic and that have good longer-term prospects, but have encountered temporary cash flow problems due to the pandemic and are not able to get credit on reasonable terms as a result. Main Street loans may not be the right solution for some businesses, in part because the CARES Act states clearly that these loans cannot be forgiven. Our credit facilities have improved lending conditions broadly, including for potential Main Street borrowers. The evidence suggests that most creditworthy small and medium-sized businesses can currently get loans from private sector financial institutions. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in unusual circumstances. By serving as a backstop to key credit markets, our programs have significantly increased the extension of credit from private lenders. However, the facilities are only that, a backstop. They are designed to support the functioning of private markets, not to replace them. Moreover, these are lending, not spending powers. Many borrowers will benefit from these programs, as will the overall economy. But for others, a loan that could be difficult to repay might not be the answer. In these cases, direct fiscal support may be needed. Our economy will recover fully from this difficult period. We remain committed to using our full range of tools to support the economy for long as needed. Thank you.
Thank you, Chairman Powell. For my first question, I'd like to keep your answers to this as brief as you possibly can because I want to get on to a few others. But I want to talk about the need for additional relief in terms of further coronavirus relief legislation. I think both of you have said that what we've done so far has been very helpful. It's having the results that you've talked about, but that some more is needed, and I believe both of you have said that we need to, in this next legislation, be more targeted. Is that correct?
That is correct.
And Chairman Powell, correct?
Yes, I would, of course, defer to the Secretary and to you on the actual contents of the legislation.
Sure, and I understand that. There's clearly a big gap between the House and the Senate negotiations and the positions on the next COVID-19 relief. That being said, there is also a very significant amount of agreement in specific areas where I believe if we were to pick up those specific areas where we do have relief and pass those, that we could have a significant positive impact. And I'd just like to ask each of you to comment on whether you believe, and I realize you have a hard time, Mr. Chairman, talking about what Congress should do, but would it be beneficial to our relief efforts if we were able to pass at least the agreements that we have already reached, if we could take those targeted areas where we do have agreement in Congress and move forward on them?
I believe there is significant bipartisan support for legislation that supports kids and jobs, particularly for extending the PPP to those hard-hit industries that need a second payment. And yes, I think that would be very meaningful for the economy broadly and for those most impacted as a result of COVID.
All right, thank you. You want to say anything, Mr. Chairman, on that?
I just would briefly add that I do think it's likely that additional fiscal support will be needed, and I think these are great areas to be looking at.
And in terms of targeting how we approach this, on July 31st, I sent both of you a letter regarding expanding the Main Street lending facility to allow for asset-based lending and for a commercial real estate facility. Yesterday, I met with many of the restaurant owners from Idaho And there is a bill, as you're probably aware, to try to establish a targeted legislation to deal with our restaurant industry. You've both responded to me that there is some difficulty in putting together the kind of relief I requested for asset-based lending and for the commercial real estate markets. Could both of you just expand quickly? We got about a minute left for each of you on my time as to what the difficulties are there and how we may proceed to get some targeted relief in those areas.
Yeah, Mr. Chairman, I think as it relates to commercial real estate, the chair and I have spent a lot of time on this, and we're very sympathetic to the issue. There are structural issues because in many cases these loans are in commercial mortgage-backed securities that have prepayment penalties and don't allow for additional funding behind them. But we continue to look at solutions. And I would just say as it relates to the restaurant and broader hospitality industries, we think those industries don't need more debt. What they need is economic relief because they're shut down as a result of COVID.
So that would be more of a forgivable loan or grant program?
More PPP money, again, targeted, in this case, very targeted to businesses that have decreased revenues would be very important to saving jobs.
And would you both agree that the PPP program needs to be made even more flexible?
I think the good news is there's strong bipartisan support around both flexibility on PPP, but also additional funds that are highly targeted.
All right. Chairman Powell, do you want to add anything to that?
Not really, no, thank you.
All right, then let me just conclude by saying I agree with the need to move forward. I think that the comments that you've made highlight the fact that there is, you are the one who's negotiating in most of the arenas here, Secretary Mnuchin. You were probably surprised to hear the attack today that you aren't negotiating, that we aren't negotiating. But the fact is there is broad bipartisan support for many major efforts that need still to be taken. And I believe that your testimony highlights the fact that that's something we ought to be able to get going forward on. We ought to do what we can reach agreement on and get it done soon. With that, Senator Brown.
Thank you, Mr. Chairman. Secretary Mnuchin. President Trump said that with regard to the coronavirus, quote, "I think we did a great job." Do you agree with that? Do you think the president's done a great job with the coronavirus?
I do. I think we've made tremendous progress on testing. We just committed to 150
Mr.
million
Secretary, I'm sorry to cut you off. I hope that you and the president don't dislocate your shoulders by patting yourself in the back, saying "good job." We are 4% of the world's population. We're 22% of the world's deaths. You bragged about the economy growing so fast. Your words. Our unemployment rate is significantly higher than Germany's, significantly higher than France's, twice what Taiwan's is, almost three times what South Korea and Japan's is, much higher than Australia, twice what Britain's rate is, twice what New Zealand's rate is. I mean, I know you think the economy's doing well, but if you're talking to your wealthy friends on Wall Street, but things are pretty bad for most working Americans, are going to get worse unless you come up with a real package. So let me talk about the package that you just discussed. Senate Republicans, as you know, offered a paltry, some call it emaciated, piecemeal coronavirus bill. You and the president said you wanted a bigger number than the $500 billion, which Republicans offered. So if you want a bigger deal, they came up with something so small. Which Republicans are opposed to going higher?
Well, let me just clarify. I'm not bragging about the economy. What I've said is we've made a major recovery from a shutdown, but we have more work to do, and that's why the president and I want more support. I've probably spoken to Speaker Pelosi. I've probably spoken to Speaker Pelosi 15 or 20 times in the last few days on the CR, and we've agreed to continue to have discussions about the CARES Act. And I would encourage, like we had bipartisan support in this Senate, 96-0 and 100-0. We're very proud, and I specifically worked with you on many pieces of the legislation.
But I want to go back. The Senate offered a paltry $500 billion plan. Economists all over the country wanted 3 and 4 and 5 times that amount. You and the president said you want something larger. So why the president of the United States typically, sorry for the cliche, when he says jump, Mitch McConnell and Senate Republicans usually say how high, but the president of the United States wants something bigger. You said you want something bigger. So what's the holdup? Why? You've always been really good. Look at the tax cut. $1.5 trillion, big, way more than $1 trillion tax cut. And 70% of it went to the richest people in the country. That's what you wanted. That's what your cabinet wanted. That's what the president wanted. You got all the Senate Republicans to go along with that, even though it blew a hole in the federal budget. You knew all that. So why can't you get Senate Republicans to go along on a bigger number than the $500 billion package? What gives here, Mr. Secretary?
Again, I would just emphasize, I think you know this, but this requires 60 votes in the Senate, and I would encourage the Democrats in the Senate to work with us. I think there are areas of support. Let's pass things that we agree on quickly, and we can always come back and do more. So it's less of the issue of what the absolute number is. And I'm sure you and I agree on there are areas that need to be passed.
Mr. Secretary, I know you will say pass something minimalist that mostly affects Wall Street and doesn't much affect workers, and then we'll come back. But considering Senator McConnell, for 4 months after the House passed a bill that would matter for schools, for local governments, for unemployed workers, for the Postal Service, for people who might be evicted, Senator McConnell said there's no sense of urgency, and all of his spineless Republican colleagues went along with it. You know that, and you went along with it. So let me ask it a different way. Millions of people lost their jobs. Another 800,000 workers filed for unemployment this week. The $600 unemployment insurance that came every week that kept, literally, studies show 12 million people out of poverty. That's $600 a week. That evaporated in early August. You know that. It evaporated because the Senate Republicans refused to act. The House had done it. The Senate Republicans refused to act. Workers they obviously can't get a loan or grant through any of the facilities, and I appreciate the work that the chair of the Federal Reserve has done, but those people that lost their $600 that could face foreclosure, what do you suggest they do? What do you suggest those people who lost their $600 do if they don't have the money they need to buy groceries this week, or with October 1 coming, they can't pay their mortgage or their rent? What are they to do, Mr. Chairman, Mr. Secretary?
Well, I think, as you know, because that expired, the president was forced to move forward with executive action. So we are still providing those people. And again, I would encourage both the Democrats and the Republicans to sit down together. There is an agreement on extended unemployment.
Secretary, I'm sorry, my time's expired. The president wasn't forced to do that. The president could have gotten his majority leader, who always does his bidding, and the Republican caucus to go along with the Democrats to keep the $600 coming. Don't act like the president was forced to do something. You simply didn't step up for these workers. $600 a week. 600,000 people in my state lost their unemployment insurance. And you essentially, you and Senator McConnell and the President of the United States are simply saying to those 600,000 Ohioans, sorry, you're on your own.
I think that's just a gross misstatement and exaggeration. And again, if the Democrats are willing to sit down, I'm willing to sit down anytime for bipartisan legislation in the Senate. Let's pass something quickly.
And I would just add,
you could get 47 Democratic votes for $600 a week this afternoon if you're willing to do it. For every one of those workers, we all know what that means in our states. We would all vote for it. Bring it forward.
and before we go to Senator Shelby, I would just add, as the Secretary was saying, this is one of those areas I was talking about in my questions. We have the ability to move forward on this if we have a willingness to move forward on pieces of this plan that we have agreement on. Senator Shelby.
Thank you, Mr. Chairman. First of all, I believe I can change, hopefully, the tone and the substance of where we are today. Mr. Secretary and Chairman Powell, I want to tell you, I want to commend you for what you've done, the leadership you've done under difficult circumstances, and what you want to do, and your candor with this committee about a lot of things. Mr. Secretary, my first observation is you've talked about this, and that's the economy. We're all interested in it. We've seen the jobs, unemployment drop and the unemployment go up. In my state of Alabama, for example, we were in double digits, and now we're at about 5%. We'd like to go to about 3 or 4. We know it takes a while to do this. It takes years sometimes. But we have made a lot of recovery thanks to a lot of the leadership that you two working together with the financial situations that we face. Chairman Powell, you're not only the run the monetary system. You are the regulator of our largest banks. Tell us here today, I asked you this, I believe in February here, what's the basic conditions of our banking system from your perspective, and how does this change in contrast with 2008?
I'd say it's a completely different and much better situation than we faced in 2008. So, as you know, we spent a decade working on strengthening capital requirements, liquidity requirements, better ability to understand and manage the risks that institutions are running. And I think you see the results of that now. So our banks so far have really been, a source of strength. They've been able to absorb deposits.
Considering all the problems we're facing right now, they've shown resilience, have they not?
They have. Now, of course, it's early days. We can't be declaring victory, but yes, so far they've been a source of strength.
What do you've talked about different views from the Fed as far as deflation, inflation, and so forth, and basically say we need a little inflation, and we do when we're trying to deal with recovery. What's your outlook on that? Because we're dealing with price stability, we're dealing with the job market, everything that goes with it.
So, of course, for many years, the problem was too high inflation. We can both remember that very well those days, and it was very important for the Fed to get high inflation under control. We did. Today's challenge is a little bit different. There are disinflationary pressures widely around the world, and you see in Europe and in Japan, for example, extremely low interest rates, very low inflation, and the central bank, because rates are so low and inflation is so low, the central bank really doesn't have as much firepower as it would like to respond. So we just want inflation to be 2% on average, not much higher, just 2% on average. That's what we want, and that'll give us the ability to have significant ability to cut rates when the economy turns down.
Mr. Secretary, we've made great strides. You talked about it. I don't think you were bragging. You're just stating what's happening here, which we all know. The data is there, and you have to face and play with it and face it, and you're doing a good job there. How do we move to the next step? Because I believe we're on the threshold, maybe, of a robust and sustained economic recovery that maybe we haven't seen. People are saving money. They're staying home. The retail sales are down, but people ultimately are going to get out and buy and push this economy, I think. What's your belief on all that?
I think the progress that we're going to make over the next few months on testing and vaccines is going to create tremendous encouragement for people to feel
confidence.
By the way, I also want to just personally thank you for your work on the CR. You've been instrumental.
Well, we worked with you. We want to keep the government going at whatever cost, and I think it's important. You do too.
Thank you. And I would encourage more targeted relief for businesses, particularly small businesses that through no fault of their own have been shut down or have government restrictions or state restrictions because of COVID. And I think that we should act quickly because they need the support now. They don't need the support next year.
Thank you. Thank you both for your service. Thank you, Mr. Chairman.
Thank you, Senator. Senator Reed.
Thank you, Mr. Chairman, and welcome, Mr. Secretary, and welcome, Chairman, for your presence here today. Chairman Powell, you've indicated that we can't succeed economically until we defeat the disease, and you've stressed the need for social distancing, wearing masks, et cetera. Could you elaborate on the economic effects of wearing masks and doing things that are in public health?
Yes, I'd be glad to. So everyone wants to, I think, unanimously wants to reopen the economy and get back to full employment as quickly as possible. But doing that is going to go hand in hand with doing things like wearing masks and keeping social distancing and that sort of thing, because that's what will help keep the spread of the disease in check, and that's what will enable more and more parts of the economy to reopen. And I'm thinking particularly of parts of the economy where there's close personal contact. So it's very important. In fact, doing those things is very much aligned with a fast reopening, as fast as is sustainable.
I find it interesting that your comments are almost identical to the head of the CDC, the Center for Disease Control, and yet they're not being accorded any weight at all by the president. And he effectively is rejecting both medical advice and economic advice, and I think that is a phenomenon that is continuing to see us ineffective in dealing with the disease, and I hope it changes. You also indicated that there are downside risks, particularly outside of Wall Street on Main Street, situations where small businesses and their customers, mom and pop landlords, state and local governments. Can you elaborate on the consequences of continuing to fail to provide real support for these entities through a stimulus package?
Yeah, so let me say that I think that the CARES Act provided great support and should get a lot of the credit for the recovery we have so far, which has been faster and stronger than most forecasters anticipated, certainly faster and stronger than I anticipated. And so the risk going forward is that people now are spending because they got money in the bank even though they're unemployed. They may have saved part of the checks that they got or the unemployment insurance. The risk is that they'll go through that money ultimately and have to cut back on spending and maybe lose their home or lose their lease. And so that is the downside risk of no further action. We don't see much of that yet, but it could well be out there in the not too distant future.
Well, with respect to rentals and mortgages, we know there's a tsunami brewing because through federal and local legislation, there's been a ban on evictions and a ban on foreclosures, but that ban will end one day, and it'll come unless we move in dramatically now and provide resources to help. One of the key actors in this whole process are state and local governments, and in the CARES package, we provided resources for them. I think they could be used more liberally. I think the Secretary could, by rule, expand access and flexibility, indeed including taking care of lost revenue, and I hope he can do that. But the facilities that the Federal Reserve has used are sort of stopgap measures, and they haven't really worked out very well from the feedback I'm getting on the ground. The municipal facilities, for example, I don't think recognize the fact that most states require legislative approval of a bond issue, and indeed municipalities have to go to their voters to get approval. That's very difficult. With respect to the nonprofit functions, asking for significant revenues versus other aspects, it makes it difficult. Can you comment on these facilities? They seem to just almost destined not to work. We need direct grants to the states and localities. Chairman Powell.
These loans cannot replace direct grants at all. They're really there to provide liquidity, and of course, state and local governments are generally not allowed to borrow to fund deficits. So what's happened is, since we announced our facility, borrowing among state and local governments has been at record levels, and the rates that they've been borrowing at have been at record low levels, and that goes right across the yield curve and right across the rating spectrum. So I would say that the municipal finance market is now working pretty well, and has accomplished what we can accomplish as a liquidity provider. We can't do transfers, and of course, that's why our facility is structured the way it is.
Just a final point, it seems that you're acquiring sort of tests of their assets and their liquidity, which if they had those assets and liquidity, they wouldn't be borrowing from you. So I think, again, this is not the right approach. And there's a lot of money involved here, but it's not going to get to states and local governments. They need, as you just said, they need the grants. Thank you.
In the municipal facility, we go by the ratings, not by any particular financial requirements. We've got a transparent set of requirements, and that's what dictates access.
Thank you, Senator Toomey.
Thanks very much, Mr. Chairman, and Mr. Secretary, and Mr. Chairman, thanks for joining us. Just as a quick follow-up, I think it's important to keep some context in mind. when we talk about direct grants to state and local governments, Moody's Analytics estimated that the grand total of lost revenue and additional expenses incurred by states and municipalities is going to end up somewhere between $250 billion and $600 billion, the latter of which is only likely to occur if there's a very severe further outbreak of the coronavirus this fall. We sent $500 billion to state and local governments with the last bill, probably, quite possibly, already covering the full amount of the lost revenue and added expenses. Why we would be talking about sending still more at this point is not clear to me. But I want to return our focus to the 13 free facilities themselves. I hear a lot of criticism about these facilities that seems to reflect the view that if these facilities haven't been drawn down to a great degree, then therefore that's evidence that they have failed. And I really think we need to remember what the purpose was in the first place. The whole purpose behind setting up these facilities and making them available was to allow private markets to function again, right? When we were back in March, we had frozen capital markets, we had inability to access credit, we had the risk of a very frightening and very, very damaging catastrophe because credit wasn't flowing, wasn't able to flow. And what these programs were meant to do, in my view, is to get the private markets functioning again. They were not meant to replace the private market. They were not meant to systematically bail out companies or bail out companies at all. They weren't meant to be a substitute for fiscal policy. They weren't meant to be subsidies for business and municipality. They were meant to stabilize markets and make sure that creditworthy borrowers, be they corporate or municipal, would be able to access credit. And when I look at what has happened since then, certainly whether you're looking at macroeconomic data, which as the Treasury Secretary pointed out, and the Chairman, I think, also, has come back faster and more robustly than most of us thought it would. But even more importantly, when I look at the private capital markets, they're functioning. In fact, they're functioning at record levels of volume of issuance, both in the corporate market and in the municipal, nearly record low interest rates. And so I think the rational conclusion to come from here is this has been remarkably successful. It did exactly what we had hoped. Now, look, there's some sectors, especially some narrow categories where we've still got some problems. Asset-backed lending we've talked about. But I'd like to ask the Treasury Secretary and the Chairman of the Fed both to just comment, if you would, on the availability of credit for creditworthy borrowers. What is it like? What are the capital markets like? What are the lending markets like? Are creditworthy borrowers in America able to access credit as a general matter?
Well, I would agree with you exactly what you said. And again, I would just remind people the chair and I executed the first few facilities even before the CARES Act was passed, when the markets were literally shut down. These are emergency facilities. They're not intended to be subsidies. And the best success is us not having to use them. So in many cases, the mere announcement and commitments unlock the markets. As I've said in the past, companies like Boeing were able to borrow $25 billion in the private markets and not have to come to the government. Many of the large airlines turned down the loans that we were offering them for the same reason. So I think they've been enormously successful. And in the areas where they have not worked, it's primarily entities that really need subsidies, and it's not just a lack of financing.
And I would agree with all of that. We haven't made a single loan to a corporate directly, and yet something like $1 trillion in financing has happened. So clearly for corporates, the financial market is working. But the same is also true. I think it's $250 billion in issuance among the municipals, including some of the ones that accessed our facility have also been able to access the public market. So public markets are out there and they're working, and the pricing is pretty good. So I do think those two, the market-based facilities and the earlier ones that we did pre-CARES Act, have all done their jobs pretty well.
Thank you, Mr. Chairman.
Thank you, Senator Timmy. I think that's a very important clarification, and it's appreciated. Senator Menendez. If Senator Menendez is not available, Senator Tester.
Thank you, Mr. Chairman, and I want to thank Secretary Mnuchin and Chairman Powell for being here today. This question is for you, Secretary Mnuchin. The chairman referred to this hearing a couple weeks ago when we heard from 3 witnesses at varying views of what needs to be done to move forward, but they were all in agreement that what's happening now is insufficient. The $500 billion Treasury slush fund isn't making it to Main Street business, as has already been pointed out. The workers, the families, and those are the folks that need the most assistance right now. PP is long gone. Many of the small businesses, their employees continue to struggle. There's been help for airlines, which I agree with. But what about the restaurants, the gyms, the venues, the breweries, the distilleries, the seasonal businesses, and others who are bearing the brunt of this crisis? The health and economic crisis is still there. These folks still need our help. And I see a lot of big names when I look at the disclosures, and those businesses may need support. But the only Montana lenders that have been able to utilize the facilities are for PPP. And no, I repeat, no Montana businesses have benefited from the program. So my question to you, Secretary Mnuchin, is what are you doing to help the real Main Street businesses that are in distress?
Well, let me just first say, if this was a Treasury slush fund that I could use however I want, I would reallocate it to help those businesses immediately. But unfortunately, I need congressional authority. I have encouraged Congress that we'd be willing to give back $200 billion of unspent money to be reappropriated. There's also $130 billion of unspent money in the PPP. So I would encourage that we work together on a bipartisan basis to specifically help the types of small businesses that you're referring to.
Have you asked for congressional authority to move that money to Main Street businesses?
I've asked for congressional authority to reallocate that. That is in the most recent proposed legislation. And I've also repeatedly asked for the PPP to be reauthorized so we could use the $130 billion that's sitting there.
Well,
that will help Main Street businesses.
Once again, and I say this for the senators that are on this call. Look, we had a proposal by Senator McConnell here a week ago that had poison pills in it to privatize education, which is what the boss wanted for a long time, and to put impediments on our legal system. My God, why this can't be brought to the floor for the congressional authority at a minimum makes no sense to me. And I will tell you, Democrats are not holding that up. Chairman Powell, I have been told that the reason the stock market looks so good is because the Fed has been buying a lot of bad debt. Could you enlighten me on what kind of bad debt you're buying and how much money the Fed has put out to buy bad debt?
Well, that must be a reference to the secondary market corporate credit fund, which I think has bought, it's in the range of $10 billion in total. We've bought no debt from any large companies in the primary corporate credit fund, which was the main facility. So, of that $10 billion that we've bought in the secondary market, almost all of that will be investment grade. So I think we've bought very, very little non-investment grade debt. We have bought some, and we bought it in the form of ETFs as well as in regular bonds. But in terms of the broader financial markets, it would be a drop in the ocean.
So you don't agree with that statement that that's why the stock market is actually performing as well as it is?
I don't agree with the premise that we've bought a lot of so-called bad debt. I don't want to comment on the level of the stock market directly or indirectly, but it just isn't the case that we bought a lot of so-called bad debt. We haven't.
Okay. Secretary Mnuchin, after the first quarterly CARES Act oversight hearing, I submitted questions for the record to you and Chairman Powell, and while I received answers from the chairman, I finally received yours last night. They were inadequate, to put it gently. So you're here. I'm going to give you another opportunity. what measures is the Treasury put in place to prevent another tribal coronavirus relief data breach from occurring?
I'm sorry, could you repeat that? I had a hard time. You're not.
I'm sorry, what measures has the Treasury put in place to prevent another tribal coronavirus relief data breach from occurring again?
I'm sorry, I couldn't. I hear somebody a data breach, but I apologize. What was the question?
Holy shit, I thought we had better technology than this. What measures has the Treasury put in place to prevent another tribal coronavirus relief data breach from occurring again?
I'm going to have to look into that. So I'm not familiar with the tribal data breach that you're referring to, but I will get back to you quickly.
We'll remind your staff back on that. Thank you guys very, very much. Thank you, Mr. Chairman.
Thank you. Senator Scott. Are you with us?
Today, I'll start with a question for Chairman Powell. On Monday, the House passed unanimously legislation that would require the Federal Reserve to expand access to emergency credit facilities by removing a bias against the non-incumbent credit rating agencies that serve the middle market. Senator Sinema and I introduced similar legislation late last week. I'm optimistic that the Senate will act on this legislation soon. However, I do not believe congressional action should be necessary given you have the authority to resolve this issue immediately. What are your plans to level the playing field in your facilities for non-incumbent NRSROs?
We actually have broadened the circle of those who are included to include those who have a fairly broad business, those whom the capital markets rely on in particular areas. So we've done that. We started off with 3 NRSROs, and now I think we're at 6. We could come back to you on that. We could look at broadening.
Okay.
That's not something we've looked at recently.
That would be helpful, sir. I would appreciate you getting back with me on that, and certainly Secretary Mnuchin, I thank you for your hard work on the 13-3 facilities. I think we still need to create more flexibility where we see more folks having access to those resources. That would be helpful. Next question. As you both know, I've been fairly outspoken on this committee about the goal of building access to credit and increasing economic opportunity for minority communities and for the same businesses. Given my passion on this issue, it's especially tough to witness the seismic impact that this pandemic has had on Black-owned businesses. When I see reports like the one released last month by the U.S. Chamber of Commerce, which found that 66% of minority businesses are concerned about having to permanently close their doors, and 13% of minority-owned businesses that have applied for a loan to help survive the economic downturn have failed to secure funding. I'm really shocked at how dire these statistics are. Couple that with the CEO of Wells Fargo, Charlie Sharp's recent comments that he can't find talented Black individuals to be employed at Wells Fargo. I perhaps better understand the plight of so many minority-owned businesses if the CEO of Wells Fargo believes that he can't find enough talent. That is stunning, and if he needs any help, please have him give me a call. It is imperative that our most vulnerable and underserved communities are not left out of the economic recovery by making sure that those businesses can have access to the full benefits of the CARES Emergency Assistance Program that it sought to provide. Can you, Chairman Powell, describe some of the actions the Fed has taken to address the disproportionate impact this pandemic has had on Black-owned businesses and minority businesses as well?
Sure. So let me agree that this is a very troubling situation. More broadly, the pandemic is falling heavily on minority and other groups. We've done quite a lot of outreach to minority depository institution, MDIs, and tried to pull them in and make sure that they're taking part in the PPP liquidity facility and eligible to lend into Main Street. We've done the same thing with the community development financial institutions. And again, we've held webinars. We've been lots and lots of outreach to make sure they're included in the program. I think in terms of the loans that we're making, you know, our loans are broadly available to everyone who qualifies. But these are loans. Main Street is for you know, somewhat larger companies. I do think a lot
Mid-sized businesses and larger, yes.
Yeah, I think that's larger than a lot of minority businesses, and I do think PPP is also an excellent solution there.
I do think, Chair Powell, and I think Secretary Mnuchin would agree with this, that the utilization of the MBDAs to help to market the smaller businesses under 300 or 500 employees to the PPP using the MBDAs, it has been an effective strategy. There are few, not many, but few small minority businesses that qualify for the Main Street Lending Program. I certainly would love to see more success in figuring out how to connect the dots. And I would imagine that if I'm discouraged by the comments of the Wells Fargo CEO, that many entrepreneurs and small businesses, minority businesses, see the entire financial industry with a bit of a raised eyebrow on the access to that when you see that 13% of those small businesses were unable to get the credit necessary, even though we are the guarantor of those loans that become grants. Thank you very much.
Thank you, Senator Menendez.
Thank you, Mr. Chairman. Thank you to both of our witnesses. And Secretary Mnuchin, I just want to say, I appreciate your responsiveness. I don't always necessarily like what I hear, but I appreciate your responsiveness. And in this business, no one ever says that. So thank you for whenever we've called you, you've been very responsive. Chairman Powell, Secretary Mnuchin, is it a good idea for states to raise taxes and send hundreds of thousands of essential public workers off the front lines and to the unemployment lines during a pandemic and a recession?
No, it's not a good idea.
Chairman Powell?
No, I would agree. Not a good idea.
So you both agree that despite facing a historic $3 trillion deficit this year as well, fiscal austerity is bad economic policy, which would cause additional pain during this recession. Is that a fair statement?
Well, I think we have to be careful, but I am supportive of additional fiscal measures, as I've noted earlier.
Yeah, I just would add, I think there is a time coming when we're going to need to get back on a sustainable fiscal path, but I wouldn't prioritize that in the very near term when we're still in the middle of the pandemic.
And I agree, and that's my point. It's while we're in the midst of a pandemic. I would just note that Moody's, once again, its latest calculus shows that states and local governments are still somewhere in the $500 billion area of need. And like the federal government, our local communities are facing skyrocketing costs and declining revenues due to the pandemic. But unlike the federal government, they can't borrow money to get through the crisis. Instead, they're being forced to do the unthinkable, lay off hundreds of thousands of teachers, nurses, firefighters, and other essential workers at a time when we need them the most. But there is bipartisan support to avoid such a disaster. The $500 billion included in the SMART Act, which I authored and introduced with 3 Republicans and 3 Democrats back in May, mirrors the bipartisan House bill that exists. And even President Trump said he supports, and I quote, something like the $1.5 trillion bipartisan proposal. Mr. Secretary, as the lead negotiator for the White House, are you optimistic about getting Senate Republicans to support President Trump's call for a much larger stimulus package that includes state and local funding?
Well, the president has expressed flexibility to give more money to state and local governments, and also flexibility for the money we've already sent. And as I've said before, I look forward to sitting down with both Democrats and Republicans to see if we can agree on bipartisan support that is very necessary across the economy, targeted.
Well, I appreciate that. I think that your bigger challenge is going to be with those in the Republican caucus, of which Senator McConnell himself has said there's about 20 members of his caucus who don't want to vote for anything more. And I think there isn't any economist I have seen that suggests that not doing anything more in the midst of this pandemic is going to meet the challenges of families, of small businesses, and getting us back in shape. Secretary Mnuchin, in June, Chairman Powell issued a statement on racial equality that said, quote, everyone deserves the opportunity to participate fully in our society and in our economy. These principles guide us in all that we do, from monetary policy to our work to ensure fair access to credit across the country. And on Tuesday, before the House Financial Services Committee, he stated, quote, the rise in joblessness has been especially severe for lower wage workers, for women, and for African Americans and Hispanics. Mr. Secretary, would you agree with those statements?
I would.
So I've heard from a number of minority-owned businesses, and I know that in a previous answer there was suggestion that PPP, well, there are minority-owned businesses in the 500-plus category. For example, in our nation, Hispanic Broadcasting, which serves an essential need in informing, a large part of the American society, would be in that middle market, but they're just some. I think we have an opportunity right now to demonstrate our commitment to serving minority communities in your implementation of the Mainstream program. So, Mr. Secretary, could you commit to reviewing the terms of the Main Street program to identify what changes could strengthen minority-owned business participation and share that analysis with me?
I will, and let me just say, I know Senator Warner has been working on, and I've spoken to Senator Crapo and Senator Scott and others about reallocating some of our money and committing $10 billion to CDFIs that could be leveraged to $100 billion of immediate lending into those communities that are especially hard hit. So I would encourage this committee to continue to look at that proposal.
Thank you, Mr. Chairman.
Thank you. Senator Sass.
Thank you, Chairman. Thanks to both of you for being here, Chairman and Secretary. Secretary Mnuchin, when I'm home in Nebraska every weekend, the most common question I'm getting in this space is about the PPP forgiveness simplification issue for loans under $150,000. And I'm just curious as to whether or not you see a simplified forgiveness form coming. And given that we are approaching the 6-month deadline, what should small businesses do if we don't have certainty on that answer yet?
Well, we did create an easy form. I know there is bipartisan support for going much further, which we think we need legislation for. And we would support if there is legislation to have loans under $150,000 have a presumption, but allow for us to audit them as needed. And I know that's something that's been discussed.
Thanks. Do you have any views on any of the specific proposals on, A, where your regulatory authority ends and where you need legislation, but then on the specific legislative proposals?
We believe we need additional legislation to simplify it beyond what we've done, but would want to maintain, as I said, fraud protection.
I completely agree with you on the fraud protection. So is it your view, though, that small businesses, given what you know about where we are in the negotiation and all the hard work you've been doing in that space, as we get under 6 months from deadline, would you recommend that businesses that took $145,000, you think they should fill out the current, let's call it medium length form? Your easy form, but not really as simplified yet?
Yeah, I would. I would encourage them. The portal is open. I would encourage them to move quickly and fill that out and not wait for legislation. But if we can get legislation to help them, that would be great.
Thanks. I'd be interested in both of your views on the implications for the real estate markets of the transition to home remote work that we've seen over the last 6 months. Chairman Powell, maybe if you'd start, I'm interested in both housing and the commercial real estate markets.
You know, it's there are clearly going to be significant implications. We don't know how long they'll last, but for now, the prices of homes in the suburbs and second homes have gone up, and if you own an apartment in downtowns of a lot of cities right now, probably the value has gone down. It's going to be hard to say. Probably some of this will be sustained. People will work from home more. It's hard to say, though, if we, if you think 10 years ahead, will it really be different than it would have been otherwise? Maybe at the margin. It's something we'll be watching carefully.
Secretary Mnuchin.
I think there's no question on the commercial real estate markets, particularly in the big cities, there's going to be an impact. And perhaps the only good thing that's come out of this is that many businesses and us in government have figured out that we can actually, part of the economy sometimes can work effectively remotely. So I think partial remote work is here to stay.
Thank you. I was in a conversation with Fortune 500 CEO of an entity that has a lot of commercial real estate property, maybe 6 weeks ago, and he was saying that during the height of COVID time, pre-COVID, they had 70% butts in seats any given day. You'd have some people who were sick, some people who were on personal leave, some people who were on work travel, or some people who might have been on vacation or sick or remote working. But when they came back post, being at 0% occupancy post-COVID, they came back and they started at about 29%. And the experience they had is that so many of their folks that were in their commercial real estate spaces were still having to Zoom and engage telephonically with people who were on a remote work situation anyway, that they don't see themselves getting back to anything like the density potentially ever. So I appreciate your point, Chairman Powell, that we can't see into a 5 or 10-year crystal ball, but I think it's important for us to keep conversing between Article 1 and Article 2 as you're learning about this, that you would keep our committee here giving our housing purview in this domain as well. The chairman had to step out. I was supposed to call on someone, but he has returned.
Thank you, Senator Sass. And the next is Senator Warner.
Thank you, Mr. Chairman. And I again want to welcome our witnesses. I want to step back for one moment, and we've got differences, but I want to commend Chair Powell, Secretary Mnuchin, and frankly, members of this committee. I think we rose to the occasion back with the first couple of CARES Acts. We made historic investments. I think history will treat us well. I appreciate Ranking Member I and the chair and others were in a number of sessions with the secretary. The approach we took, I think we desperately need to get back to that approach. I've never seen a bigger disconnect between the stock market and the real economy than right now. I also want to echo what Senator Scott and Senator Menendez have said, and want to thank them for being part of this Jobs and Neighborhood Assistance Act that the Secretary referenced. I want to thank the chair and the ranking member as well for their willingness to work on this legislation. This would take billions of unallocated funds from the CARES Act and directly invest into MDIs and CDFIs, which the Secretary explained would dramatically leverage those dollars and help minority businesses that, as Senator Scott has so accurately pointed out, really have been disproportionately hurt. 420,000 Black-owned businesses shut down, and we can and must do better. And Chair Powell, I know we've gone back and forth on a 13-3 on this. Not get there, but I would argue, I know you said earlier in the week in your testimony that you were concerned about Main Street going smaller below 250 and the Fed's capacity to deal literally with hundreds of thousands, if not millions of loans. I would argue the way to deal with that, or at least one tool to deal with that, would be the direct equity infusion into those MDIs and CDFIs. That's goal and purpose is to lend to these smaller institutions. You wouldn't have to necessarily grapple with all the individual loans, but you could make these kind of, I think, investments and Fed support programs for these institutions that service that community. And I, again, just really am very, very hopeful that we're going to come to an agreement and make that additional COVID relief package. I do want to get to a question, but I want to point, I guess the question I'll start with for Chair Powell is, your two predecessors, a series of both liberal and conservative economists came forward, said we need to make substantial stimulus investment that is in the trillions of dollars. I echo my Democratic colleagues that when the majority leader put forward a plan that was 1/3 of the size of what even the Trump administration suggested, that was not a good faith effort. I would strongly urge all my colleagues that we ought to not break. We ought to get another COVID package out. It is essential. People in my state are hurting. I agree with Senator Sass. We need to go ahead and give the Secretary the presumption on those loans, 150,000 and under, that they can be presumed to be grants and really make that form shorter. But Secretary Powell, can you address again this issue we desperately need this larger relief, and that targeted relief does not mean small. It just means we need to target those most affected. Could you address that?
Sure. So again, I'll leave the details. It's not appropriate for me to have express a view on the particular details of that, but I would say that the recovery we've had so far owes in significant degree to the CARES Act and the support that Congress and provided in conjunction with the administration. And I think while the economy has been doing better than expected, I think there's downside risk to that if there is no further fiscal support. The people there are still something like 11 million people whose payroll jobs they've not gotten their jobs back. Those people are able to spend now because of the checks that they got and because of the unemployment insurance that they got, the enhanced unemployment insurance. There's downside risk to the economy probably coming if some form of that support doesn't continue.
I guess what I would ask, and I know I'm down to 35 seconds, I'd ask both you, Mr. Chairman, or Chairman Powell and Secretary Mnuchin, is the risk to the economy long-term greater or less if we undershoot versus overshoot? I'd ask you to simply say, should we understimulate or overstimulate when we're at this critical point? On the margin, recognize.
Again, I would just say we're going to have to. We will come back to a place where we need to get the U.S. federal government on a sustainable fiscal path. But again, I wouldn't prioritize that now when we're in the middle of a pandemic.
Secretary Mnuchin, I know I'm over time.
What I would say is forget the long term. The issue is now, and I would just say some is better than none. So I would encourage, again, bipartisan support. And again, let me also recognize this committee and the great work they did. And Chairman Crapo, if you and the ranking member and other members want to sit down, I'd be willing to come here anytime to continue to work with you.
Thank you. Senator Cotton.
Probably of people who work in almost any workplace in America, the members of this committee, like the 100 senators of the United States Senate, have been traveling as much as anyone on airlines going back to May. And I think we've all probably had the experience that I've had multiple times of gate agents or flight attendants or pilots asking me about the status of negotiations related for additional relief for the airlines. Just this past weekend, flying back to Washington, I had a flight attendant literally come up and hug me in my seat because she recognized me, quickly apologized for violating physical distancing protocol, but it's okay because we both had our masks on and it was brief, to tell me that she had been working for over 20 years with this airline. She was afraid she was about to lose her job in early October, and it would be the first time in her life she had ever gone on unemployment. And I told her that we're still working to do everything we could in Washington to try to avoid that fate, because not a single person in the airline industry or any of its ancillary industries, or for that matter in any business in America, from the frontline workers all the way up to the CEO and the board, is responsible for the fate that these businesses and industries find themselves in. It's a responsibility for the Chinese Communist Party and its incompetence and malignancy in covering up this disease from the very beginning. Secretary Mnuchin, what is the status of the administration's efforts to try to find some relief for the airline industry in particular? I know that you and the President and others have been meeting with the leaders of the companies as well as the leaders of their employees' unions. And I'd just like to hear what you have to say, and I'm sure that those workers would like to hear what you have to say as well.
So thank you. First of all, I just want to say that the work that was done in the first bill was extraordinary and literally saved the entire industry. I know Senator Wicker and others have proposed extending more payroll support payments in return for not having layoffs, and the President and I do support that approach.
Is there anything that you have under existing authorities, either the CARES Act authorities or prior law, that could help the airlines avoid these coming layoffs?
Unfortunately, there's not, but again, we are encouraged. There's a lot of money in the loan program that we are not going to use specifically for the airlines and reallocating that.
Thank you. Chairman Powell, you just noted there's still 11 million Americans who have not gotten back to work. Almost as many have gotten back to work who lost their jobs at the height of the uncertainty about the pandemic in the spring. Obviously, the airline and related industries are one big one. Could you give us a sense of the other industries and the kinds of businesses in which those 11 million Americans who are still out of work are concentrated?
Yes, there are big numbers of people still unemployed in the businesses that involve a lot of contact with the public. So it's hotels, it's entertainment, it's retail, it's restaurants, it's bars, all of the places where you're getting people in groups together and facing them face to face. That's not all of it, but that's a big chunk of the remaining unemployed.
Yeah, and I think again, elected officials probably experience this as much as anyone in America today, given the amount of times we travel and the time we spend in hotels, or we used to spend in public venues speaking. And I, for one, am very mindful, I know most of our members are as well, about the impact this virus has had on them. In those industries, is the single best thing we can do to get a vaccine and get the virus under control, putting aside what kind of fiscal or monetary relief we may provide to them, just given the nature of the travel and hospitality and tourism and event industry, is that the vaccine the single best thing that we could get?
Yes, in the long run, I think that's what it's going to take to get business travel back to near where it was.
Okay.
For example.
Final question, Chairman Powell. You've cited a couple times, as well as in your written testimony, the 13 different programs that the Federal Reserve has stood up. Which of those programs, in your opinion, has performed the best given its stated objectives?
So I think the original ones that dealt with the funding markets stopped pretty quickly what was a budding run on short-term wholesale financing markets very early on. Those succeeded. I would also cite the corporate credit facility for having opened up the market really without making a single loan. After that, I would cite the PPLF was very successful in letting small banks make their PPP loans and then get them off their balance sheet so they could make more loans. I think the municipal facility has worked in the sense that we have $250 billion in muni issuance, which is much higher than even last year before the pandemic, and at attractive rates. So I think there's a lot of success. I think there's also some difficulties. For example, Main Street is much harder, much more difficult.
Thank you.
Thank you. Senator Warren.
Thank you, Mr. Chairman. The pandemic and the recession it created have hit communities of color the hardest. And I've said before that I believe that we need a policy response that acknowledges that. But it is equally important to recognize that racial inequality was amplified by the pandemic. It was not created by it. And even during periods of strong economic growth, measures of economic well-being for Black and Brown Americans has lagged far behind those for white Americans. Now, Chairman Powell, the last time that you were before this committee, you told me that the persistent economic gap between Black and white Americans was an unhealthy feature of our economy. Is that still your view?
Yes, it is, Senator.
Good, and I agree with you on this. Since it was created in 1913, Congress has spelled out in law the mission of the Federal Reserve to keep unemployment as low as possible and to make sure that we have a stable financial system, the twin goals of the Fed. Now, you have policy tools at your disposal to accomplish those goals. For example, your decisions affect how much a family pays on a mortgage or a car loan. Your decisions determine how quickly someone gets credit in their bank account after a paycheck is deposited. But as you and I have discussed before, Black and white families face very different economic realities in this country. And that means decisions from the Fed affect those families differently. So the Fed recently took a step in the right direction by making it clear that fulfilling its mandate means keeping interest rates low long enough to allow growth to reach all households, not just those who are doing well already. And this is especially important because historically, in a time of crisis, Black unemployment jumps faster and then takes longer to go down. And the Fed shouldn't slow economic stimulus before Black workers see real economic gains. This updated statement interpreting your mandate is a good first step. But I believe the Fed could be doing more. And that's why I've introduced a bill with Chair Waters and Senator Gillibrand to require the Fed to use all of its tools to close racial economic gaps. So, Mr. Chairman, when you were here 3 months ago, you said that the Fed would be looking for ways to use your economic tools to do more to address racial disparities. So I want to follow up. Have you identified a comprehensive list of policies the Fed can pursue in order to make good on these commitments? What is on your list, Mr. Chairman?
So I think you see on our part, a heightened focus on economic disparities, including racial economic disparities. And you see that if you look on our website, on the front page of our website, we have all of the things we're working on in that area. And it's really become quite a broad set of efforts, from data collection to research and things like that. And the reason we do that is that, you give us maximum employment as a goal, and maximum employment we now view in our new framework as a broad and inclusive goal, which really means we're not just looking at the aggregates. We're going to look at different demographic groups and different measures. So I think we are doing the things that we can do with our tools to address these issues of disparate economic outcomes. I actually think that the far stronger and more important tools are not those of the Fed. Nonetheless, I think that we are and should be using our tools to the extent we can. And actually, I would just close by saying that all of that is taking place under our current legislative mandate. I don't really think you need to change the law to get us to do this. We're doing it already.
I appreciate that, Mr. Chairman, that you are trying to do this. But I asked you two things. The first one is just name a couple of the specific things you're doing. What did you put on your list in the last 3 months?
Okay.
I appreciate that you say you've given focused attention and more attention on this. What changes did you make?
The first and most important one is the one that I mentioned, which was to define our maximum employment goal as a broad and inclusive one.
But I mentioned that one. What other things?
What other things? I would point to the fact that we've been outspoken at the Fed on our commitment to diversity and to racial justice.
I appreciate that, Mr. Chairman, but words aren't good enough on this issue. Every economic policymaker, including the Fed, should be taking steps to confront racial economic disparities head on. And frankly, this can't just be a one-time exercise. I appreciate that you say it's important to you, but the Fed needs to focus on this issue during your tenure and during the tenure of all future Federal Reserve chairs. And that's why I have legislation that would require the Fed to talk about these gaps as part of its regular reporting to Congress. And my legislation would also ensure that the Fed uses everything in its toolkit to eliminate those racial disparities. There is so much more the Fed could be doing. Consider access to credit for Black borrowers when evaluating merger applications. Make sure that payments hit bank accounts faster. Use the Fed lending facility to prevent layoffs in state and local government. I get it. The Fed can't solve every economic problem on its own. But the Fed is not a helpless bystander. Its decisions matter, and they matter most in our vulnerable communities. And it's time for the Fed to step up on this responsibility. Thank you, Mr. Chairman.
Thank you, Senator Rounds.
Thank you, Mr. Chairman. Thank you to both of you for joining us today. Despite the challenges that we have faced in standing up the payroll protection plan in the first place, South Dakotans have been overwhelmingly supportive of the relief that the PPP brought to small businesses. Recently, however, I've started to hear concerns from dozens of business owners and bankers who have experienced challenges with the PPP forgiveness portal. Senator Sass began this line of questioning and comments, and I want to add some emphasis to it because I think the message that we've received back has been considerably different than just simply having a little bit of time to fill out these forms. And what I'd like to do, one lender in particular sent me a note, and he's pretty direct on it, but I'd like to share because it kind of points out the frustration that our lenders have in terms of helping these small businesses. This is a quote that they sent to me. The forgiveness piece of the PPP is a disaster. I have 750 loans out of 1,381 under $20,000. 50 are under $2,000. They have basically the same forgiveness process as the loans of my largest borrower of over $4 million. The simplified version is not that simple. The GAO has studied it and says it takes a borrower 15 hours to complete it, and the lender an additional 75 hours to process. Our borrowers are not happy, nor are we as bankers. This is not what we signed up for in order to get disaster payments to our customers. We are trying to hold off those borrowers under $150,000, but they are getting anxious. We busted our tails off to get this money out, and we are getting absolutely screwed by the process. Lenders feel as though they have really been let down. There is more than a little fatigue. Mr. Chairman, I'd like to ask unanimous consent that additional statements that I've received from South Dakota bankers expressing frustration with the PPP forgiveness process to also be entered into the record.
Without objection.
Thank you. Secretary Mnuchin, I understand that you're limited in terms of what you can do with regard to forgiveness, but simplification should be something that I think we need to take a second look at. And I would just ask if you would work with us to see if there isn't a way to find a path forward in the near future, even if we can't get any more legislation out of Congress, to find a way to simplify this for both these small borrowers and these lenders who really did go above and beyond to try to get this set up in the first place and did a marvelous job of getting that money out.
Thank you, and we will work with you. And again, as I've said before, we support legislation that simplified this. It doesn't cost any money, and we'd still retain our right to have the SBA audit as appropriate.
You know, and Mr. Chairman, or Mr. Secretary, I agree with you. I think in whatever number we put together or whatever simplified form we put together, the ability to be able to go back and to audit at a date in the future is critical. We don't want to have fraud involved, but it looks to me like there's a huge amount of work out there that we're expecting lenders to do that basically they're not going to get done in a timely fashion, and we will have a problem that we'll have to address if we don't find a way to resolve this particular issue. Chairman Powell, did you, Mr. Secretary, did you?
No, I was just going to say I'm going to go back and again address this with the SBA this afternoon.
Thank you, Mr. Secretary. Chairman Powell, I understand the focus in the near term needs to be on getting our economy back to a place where it's firing on all cylinders. But can you briefly discuss how you're viewing the evolution of the Fed's balance sheet, recognizing that this is a different type of a situation than we had back in 07, 08, and 09. We talked a lot back then about what was on the balance sheet and how it was going to be moving around. Can you share with us briefly the philosophy that you'd like to follow with regard to the balance sheet today?
Sure. So the balance sheet continues to grow because of our asset purchases. It turns out that the volume of loans that we're making under the programs is much less than might have been the case, which isn't to say the facilities haven't worked, just that we haven't had to buy a lot. And, you know, we are a buy and hold investor. After the financial crisis, we allowed assets to mature and run off on their own. And that would be certainly, and by the way, we're a long way away from that at this point. We won't start doing that until way down the road, but then we will. You know, and the economy will grow, and the size of the balance sheet relative to the economy is really the metric, and we'll be able to get that down over time. But it's not something we'll be focused on in the near term.
Thank you. Thank you, Mr. Chairman.
Senator Van Hollen.
Thank you, Mr. Chairman and Ranking Member, and I want to thank Chairman Powell and Secretary for being here. I've been listening to the testimony, and Mr. Secretary, I understand that both you and the Chairman agree that additional fiscal help is needed to help working families and the economy. I also hope we would all agree that we should provide that relief in the most effective way possible for working families and to boost the economy. And the Congressional Budget Office just issued a report on September 18th about the impact of the CARES Act on economic impact. Have you had a chance to review that report, the CBO report?
I have not yet had a chance, but we'll do so this afternoon.
Thank you. I encourage you to do that. We had a budget committee hearing yesterday, and I asked the Republican appointed director of the CBO about the provision in the report that indicated that aid to state and local governments was among the most effective tools for helping working families and boosting the economy. So I really encourage you to do that. You're aware of the fact that during the negotiations over the CARES Act, the original proposal put forward by Senator McConnell on the floor of the Senate did not include a penny of appropriations for state and local governments, right?
Well, it provided money to education, which would have saved state and local governments significant amounts of money. So yeah, in essence, that was.
Mr. Secretary, that goes directly to education departments, which is good. And of course, we increased that at the time, but there was not a penny. And then subsequently, when this issue came up, Senator McConnell talked about letting states and local governments go bankrupt. And of course, the most recent proposal he put on the floor of the Senate does not include a penny of money for state and local government, even though the CBO report indicates that's one of the most effective ways. But as I understand your testimony, you agree that additional state and local support would be helpful, right?
Yes, we do support some additional aid.
Got it. So I'd like to ask you about a statement you made on national television a few weeks ago on September 6th, and I'm quoting what you said. You said, "I think before we got into COVID-19, I thought the debt was very manageable. We were having extraordinary growth. We were creating growth that would pay down the debt over time." That was the statement you made on Fox. I asked the Republican-appointed CBO director about that statement yesterday at a budget committee hearing, and with respect to the claim that we were creating growth that would pay down the debt, he simply said that was untrue. Just the budget did not show that. It was flat out wrong. But I want to focus on the part of your statement where you said that prior to the pandemic, we were experiencing, quote, extraordinary growth. Because in 2019, before COVID-19 hit, economic growth was 2.3%. Is that the, quote, extraordinary growth that you were referring to in that TV interview?
We were on track for significant growth beyond that, and that is correct.
All right. Mr. Secretary, you were not on track for significant growth. You've overestimated the growth repeatedly. President Trump has talked about 4% growth. And the reason I ask is that during the second term of the Obama-Biden administration, the economy grew at 2.4% per year. In fact, slightly higher than the economic growth you were talking about just before the pandemic. So by your definition, those 4 years of the Obama-Biden administration experienced extraordinary growth. Is that right?
No, again, I'd be happy to go through my projections with you offline, but we're beyond all of our projections. And again, we had projected 3% over time, which is something that has not been done in years. And we believe the economic—
Mr. Secretary, it's simply the difference between projections and reality. And the reality is that economic growth over the 4 years of the Obama-Biden administration was actually slightly higher than economic growth in 2019, which you called extraordinary growth. Let me ask you now about President Trump's payroll tax deferral proposal. where workers don't have their Social Security taxes taken out of their paychecks through the end of the year, but then they owe the money and have to pay it back. As you know, the private sector really wants nothing to do with this. It really is a shell game. I wrote to you about this along with a number of my colleagues. We sent a bipartisan letter simply asking you this, that with respect to folks in our military and our federal civil servants, that you at least give them the choice as to whether or not to participate, that you don't force folks in the military or federal employees to participate if they don't want to do it.
Could you give us a brief answer, Mr. Secretary?
Yeah, yes, could you, and when we're going to get an answer to the letter and also what your answer is?
I'd be happy to follow up with OMB, who's responsible to have the agencies. I think that's a reasonable issue if people don't want to participate, but let me follow up with them.
Thank you, Mr. Secretary.
Thank you.
Senator Perdue. He's not here? Okay, I think I'm next. Mr. Chairman, can you tell me how much money is left not without leverage in the Main Street lending program?
I'm sorry, without, can you say?
Without the leverage.
Without the leverage.
Yes, sir.
Well, I think that would just be the equity. So
right.
I think you committed $75 billion, so most of that
is left.
Yes, with no leverage.
Okay. Assuming that we're not going to use that in the next 6 months, of all of our alternatives to try to stimulate the economy, what's the single highest and best use of that money?
I think we'll use some of it. We are using some of it even as we are speaking.
How much do you think you'll use?
I think that the total loans might be, I don't know, 10, 20, 30 billion by the end of the year.
Okay, let's suppose.
That's with leverage.
Let's suppose we have 50 billion left then. That will not be, well, let me put it another way. Is there a higher and better use of that money than the Main Street lending program, given what we know about the program right now?
Well, this is really, I have a strong desire to not get too deeply into these specific fiscal questions, but I would say that though that there are some things that you've talked about today that would be directly
What's the
very
single
helpful.
higher and better use?
To me, it would be PPP, and it would be PPP, and then after that I would say something more for those who remain unemployed.
Okay, Mr. Secretary, do you disagree or agree with that?
No, I do agree with that. Not just that money, but the $200 billion that I have on the sidelines.
Okay, so if we could agree to take $50 billion of equity from the Main Street lending program and commit it to, for example, PPP, you think that will help the economy?
I do, on top of the $130 billion that's sitting there unused.
Right. Do you agree with that, Mr. Chairman?
Well, I do. I do. There is this $200 billion, though, that I think I would take that first rather than taking directly from Main Street.
Right.
The part that has not been allocated at all is $200 billion.
I understand. Mr. Chairman, what's going to happen if we don't pass another coronavirus bill?
Well, I think the risk is that spending will weaken, and that these 11 million and change people, and there are many more than that whose working lives have been disrupted, but there are 11 million in the payroll survey that are unemployed. And some of those are going to have a hard time getting back to work because they work in those difficult areas of the economy. And so they have money in the bank now from the checks that they got and from the unemployment insurance. And I think they'll go through that. And so we'll see sooner or later, probably sooner, we will see that the economy has a harder time sustaining, the growth that we've seen. That's the risk.
Okay. Mr. Secretary, if we in the Senate, along with our colleagues in the House, could agree to do one thing to improve our economic situation, What would you recommend that we do?
I would allow us to spend the $130 billion that's sitting in the PPP. It's money that's been appropriated by Congress, and allow us to send second checks to those businesses that are hardest hit and small businesses.
And that would be your number one priority?
That would be.
Okay. I'm about to run out of time, so I want to slightly change the subject here. Mr. Chairman, or rather, Mr. Secretary, I know you're part of the President's Working Group on China Markets. Is that correct?
Yes.
And I appreciate your good work on that. Two of my Democratic friends in the House have told me that Speaker Pelosi has decided not to move any Senate China bill that is sponsored or co-sponsored by a Republican. How do we address that?
I'm not aware of that, but again, we'd be happy to work with you and follow up. And
could you bring that up with the Speaker?
I'd be happy to.
Thank you very much. Thank you, gentlemen, both, for your good work. I want to associate myself with my colleagues' remarks, complimenting you. You've had to do it with happy thoughts and spit and duct tape, but you've held this thing together, and I want to thank you. Senator Cortez Masto.
Thank you. Gentlemen, thank you for being here as well. And I want to thank you for your responsiveness always, and so appreciate that. Let me talk about something that I know I've talked to both of you about over the phone and in person, is the hard-hit tourism and hospitality industry. In April, almost 8 million jobs in the leisure and hospitality sector were lost. I know you both know that. Workers in the leisure and hospitality industry experienced a peak decline in employment of more than 52%. Nevada's economy has cratered as tourism and travel stopped. Nevada's unemployment rate is more than 13%. More than 300,000 people continue to claim unemployment insurance. And in a recent survey from the American Hotel and Lodging Association, nearly 3/4 of hotels will have to lay off employees if they do not receive additional government funding. In Las Vegas and Reno, employment in our hospitality and leisure sector is down by nearly 25%, the most among all sectors. So let me start with you, Secretary Mnuchin, and you and I have had this conversation, and I know you appreciate how hard hit our industry is. You talk about there needs to be an additional targeted relief. Can you identify what that targeted relief would look like specifically for this industry?
Well, I think the PPP is the most effective way of getting targeted relief to those jobs that you're referring to. And again, we would put a revenue decline test to make sure that it was allocated to the businesses that really needed it.
But it hasn't been. Listen, I just heard Senator Rounds even say the PPP wasn't working in his state, and it hasn't worked in Nevada because clearly there are too many of our businesses that are still suffering around the hospitality industry as well, from live events to restaurants. So what do we need to do to target it? That's what I'm looking for, because my concern is a comment that you made earlier that some sort of relief is better than nothing. So I am not about picking winners and losers. And I think that comment is, unfortunately. I don't see how you can identify an individual or business that gets relief when some don't. I don't know how you can identify that maybe the airline industry who needs relief and those workers need relief when we're not giving direct payments to those who are unemployed and still working on the unemployment, and how we don't still target funding for state and local governments, how we still don't target what is necessary right now around the healthcare industry, because we all know that's the cause of our economic woes right now, and we should still be funding that. All of the things that I have seen put forth in this skinny bill, they don't fund any of those things. So don't we really need a comprehensive package? And let me ask both of you, isn't that what we need here to stimulate and continue to stimulate our economy to get out of this, is a comprehensive package so nobody is left behind?
I just want to clarify. My comment on some relief was better than no relief was implying that we should have a compromise and have bipartisan support, because right now, with no legislation, that doesn't do any good. And I would also just say, I think the PPP has helped those industries an enormous amount. They've just run out of money and they need a second check.
Right. No, I don't disagree with you there. I think we still have to target money to small businesses. I absolutely agree. And I think that's part of the concern here, is that by the conversation that I'm hearing is that we're looking at only lifting up some within the communities and not everyone. And I guess my question again to you is, don't we need comprehensive relief here?
I do think we need comprehensive relief. It wasn't a question of some versus none. It was a question of, right now, we're stuck because the Democrats have a commitment of, if it's not less than $2.2 billion, they're not willing to sit down and talk. And
well, listen, Secretary Mnuchin, I can debate this with you all day, but the public doesn't care right now. The American public wants some relief. And you can talk about Democrats, you can talk about Republicans. Look at, we can also talk about the fact that the Republicans, instead of negotiating with the Democrats in the Senate, behind closed doors, put together a skinny package, threw it on the floor of the Senate without even going through committee, without even any negotiation. And that, in Mitch McConnell's own words, there's 20 of his members who don't want to do anything. We can debate that all day long, but that doesn't get us to where we need to be, which is too many people across this country are suffering. And right now it requires us to come together and do a comprehensive package. That's all I'm looking for you, is your commitment. You've done it before. You did it 4 times before. And I just need the commitment that you're still there to do a comprehensive package with everyone.
Yes, you have my commitment. I'm available anytime. And again, I'll reiterate, this committee has been very effective. Mr. Chair, if you and other members of this committee on a bipartisan basis want to sit down, I'm available anytime.
Thank you. Thank you, Senator Cortez Masto. And thank you, Secretary Mnuchin. Your commitment to trying to put together the kind of package we need, a comprehensive package, is unmistakable. I mean, your commitment is solid, and I appreciate your restatement of that commitment to sit down with us and try to work this out. Next is Senator McSally.
Thank you, Mr. Chair. Good to see you, Secretary Mnuchin, Chairman Powell. Thanks for your work, Secretary Mnuchin. We worked together on putting together additional COVID relief that I voted yes on just a few weeks ago. And just for a review, that included $257 billion, second round of PPP that was really targeted for the smaller mom and pop shops and the hardest hit small businesses, like many of them in Arizona. They're grateful for the first round of PPP, but some of them are still struggling, trying to stay afloat, and this really would have been a lifeline for them. Also, common sense liability protections for schools and hospitals and businesses to protect them from an epidemic of trial lawyers coming after them while they're following best practices. The $300 extra a week in unemployment for that social safety net for those who are still unable to work as we continue to defeat the virus and move the economy forward. Short-term assistance that I champion for child care providers so that they could reopen and stay open. This is particularly important for working moms to be able to get that safe place for the kids to have child care while they can safely return to work. Also, I fought to extend the deadline to September 30th, 2021 for spending of the already appropriated money in the CARES Act for states, tribes, local governments under the Coronavirus Relief Fund. This was something we've heard from communities and especially the tribes. It's so important to extend that, so it was great to see that in the bill. $31 billion for vaccine therapeutic diagnostic development, vaccine distribution, restocking the strategic stockpile, $20 billion of additional farm assistance, again, going out to farmers and ranchers and growers who need that support, and $105 billion for schools to get students safely back to school, both higher education, K through 12, with school choice and support to the post office, the postal service. I know I'm hearing from small businesses, they're doing everything they can. They're grateful for PPP. Again, this was a targeted, strong relief package to get relief out the door. People are tired of hearing the blame game going on in D.C. This was going to get needed relief out the door. Secretary Mnuchin, can you just share with that $257 billion as we see the economy, the status of the economy, and A lot of small businesses still struggling. How many small businesses could we have saved if that $257 billion was out the door right now and helping small businesses across the country?
I don't have the exact number, but it's an awful lot.
Yeah, it is. I mean, in Arizona alone, over 86,000 small businesses took advantage of PPP, and that was 1 million jobs saved. So just this second round would really be impactful. I mean, if you can just share your views kind of on the economic recovery and how important this second round of PPP would be. I mean, look, let's just vote on that on the floor. Let's just continue to vote on things that we can agree upon. We should be moving this relief out to small businesses. So can you just kind of share your view and Chairman Powell of the importance of getting this out the door to support these small businesses?
As I said earlier, I think it would be the single most impactful area. And again, I would just emphasize this doesn't even require additional funds to be appropriated. We can have the $130 billion there and allocate some of the money that we're not going to use on the Fed facilities, so it would not cost an extra penny.
Exactly. Chairman Powell, do you have anything to add just on the importance of getting additional relief out to small businesses like what I voted yes on a few weeks ago?
Not much. I just would agree that this is something that would help the economy.
Great, thank you. And a follow-up on the extending the deadline. Again, this is not additional money. This is money that was already sent out. The Tribal Relief Fund, which I championed, at $8 billion out to tribes, and the resources out to states and local governments. We were able to get included into that legislation we voted on in the Senate, extending that for a year. Now, I've been in the military where we see if we've got to spend money by the end of the year, you often, use it or lose it, spend it on not the best things you could spend it on. And we've heard from tribes, for example, the Navajo tribe, who they've got a plan to invest it. But if you're talking about infrastructure projects, water infrastructure right away, things that would really be impactful to address some of the underlying challenges they've had in dealing with coronavirus, they just can't get there by the end of the year. So again, this is not one additional dollar, it's just an extension. Could you share again, Secretary Mnuchin, just your support or your views on the importance of extending
I strongly
this?
support that as well.
Okay, great, thank you. And just one last question, and I'm almost running out of time here, but maybe we can follow up. Because I've heard from many small businesses, they either took advantage of PPP or they couldn't, but they're still struggling related to managing their bills, managing their debt. And I appreciate we engaged on this in response to this pandemic, the troubled debt restructuring provision in the CARES Act. And so the statement issued jointly by the Fed encourages lenders to work with customers that are experiencing financial hardship to try and help them, restructure if needed and not have it be a ding on them. And unfortunately, I'm out of time, but I'd like to hear what you've seen in regards to uptake related to this and the implementation of this policy, and what other actions regulators or lenders are taking to ensure individuals and businesses across Arizona and the country are aware there are options beyond PPP or the Main Street Lending Program to just help give them some relief here. So look forward to following up on the record.
All right. Thank you, Senator McSally.
Yield back.
Senator Jones.
Thank you, Mr. Chairman. I appreciate this opportunity. Thank you to both the witnesses present here. Really appreciate that. I also, I just listened to a review about what was all in the bill that was voted on a couple of weeks ago. Unfortunately, time does not permit me to go through all of the inadequacies of that bill, and they are legion. The fact of the matter is that bill was less than half of what was being floated out there in August, and this majority leader had to reduce that in order to get members of his own caucus to join it. Clearly, it was more of a partisan bill. It was more of a partisan vote rather than any effort at all to reach bipartisan agreement. I would like to associate myself some with Senator Menendez's comments about city and local governments. My hometown of Fairfield has suffered. They've had to file bankruptcy. Just this last Friday in Birmingham, 150 Birmingham Public Library employees had to be furloughed. Mr. Chairman, I'd like to submit for the record a chart detailing the loss for 60 Alabama cities of $40 million that they've not been able to recoup. I'll ask unanimous consent that be submitted for the record.
Without objection.
The Alabama League of Municipalities says 46% of those are for lodging taxes. There's a lot that we can do. I think Senator Menendez covered that appropriately. Secretary Mnuchin, let me ask you real quick about the stimulus checks, because while I also hear about PPP and small businesses, I also hear from a lot of folks about either a next round or either the 150,000 Alabamians that have not got their money from the CARES package. The GAO report that was released this past Monday shows nearly 9 million Americans, 150,000 of those in Alabama, that has still not received their $1,200 stimulus checks. These are folks that don't make enough, that they don't file taxes. I understand that there was a letter that was going out in September about urging people to do that, but there's also an October 15th deadline that I am afraid a lot of people are not going to make. Can you commit to extending that October 15th deadline for a month or so, maybe until December, in order to get these folks their checks now, rather than waiting on some kind of tax credit that may or may not even work for them?
Yeah, let me go back and see if we have the ability to do that. Yes.
Okay, well, that would be great. I think you do have that ability, but if you could get back with our office about that, I would very much appreciate it. And I agree with Senator Menendez about your responsiveness, and I've really appreciated that during the course of here. Chairman Powell, real briefly, I think by now folks recognize that the stock market is not always the best indicator of where the economy is going. We have seen it's been like one of my favorite roller coasters down in Georgia, the Great American Scream Machine. It's up, it's down. It just depends on how the day traders are looking on an end of a day. Not that it's a bad one, but it's just not the only one. During the pandemic, many hardworking Americans lost their child care with daycares closing and elderly relatives worried about exposure to illness. Without the flexibility of working from home, many have had to cut back on their hours, and some can't work at all, which this means smaller paychecks or no paychecks whatsoever. The hardest hit folks, I think, in my view, are not just those that, if you go to one demographic, it's single moms. In Alabama, more than 25% of Alabama households, 25% of Alabama households are headed by single mothers. Of those, 50% of those are women and children who live in poverty. Without some kind of deal in sight that includes a stimulus check, or the ability, if they haven't got one already, to get it, how are these single moms going to put food on the table? How are they going to pay for the necessities? So my simple question, Chairman Powell, is what impact will consumers with less discretionary spending, like these folks have, what impact will that have on the economy going forward?
Let me just start by agreeing with you that the burdens of this pandemic have really fallen hard on people just like the ones you're describing. You know, if people start to run through what resources they have, they're at risk of losing their homes or having to move out of the place they're renting, maybe move back in with family, and those things are not necessarily good for controlling the spread of the virus. In addition, of course, they'll cut back their spending, again, I would just point to the CARES Act really did a lot of good in putting money in people's hands and keeping them in their homes and keeping them spending, keeping them in one piece, and you know, going forward, more of that may be needed.
Right. Thank you, Mr. Chairman. Thank you, Secretary Mnuchin. Appreciate you both being here. Thank you, Mr. Chairman.
Thank you. Senator Smith.
Oopsie. Are we there?
Yeah, Senator Smith, is that you?
Yeah, there you go. Can you see me? How do you do? Sorry, everyone.
Yes, we see you now. Go ahead.
Thank you, Mr. Chair and Ranking Member Brown, and I want to also thank Secretary Mnuchin and Chair Powell for being here. Chair Powell, I'd like to start with you. You know, I sit in the seat that was once held by Senator Hubert Humphrey, who was a champion for full employment. And in fact, his name is on the Humphrey-Hawkins bill that sets the dual mandate for the Fed of maximum employment and stable prices, and that you're charged with implementing. And you've noted several times, I appreciate your comments about how COVID has not been the great equalizer, that it disproportionately is affecting people in low-wage jobs, essential workers, often women and women of color, Black and brown people, Indigenous people. So my question is this: as you think about your mandate at the Fed and you think about the decisions that you make around monetary policy. Could you just talk a little bit about how you see this, the impact of monetary policy on supporting households of color? What can we know Fed research has shown that workers of color tend to recover their lost wages more slowly, for example. I'm interested in knowing how you think about this and how you might want to bake that more into your work as you go forward.
So the single best thing we can do is support a tight labor market, a strong labor market. We saw in the last few years of the last long expansion that the gains began to go more and more to people at the lower end of the income spectrum, more and more to minorities and women, and that was, we think, significantly because unemployment was very low. Companies were having to look hard to find workers, and it just is. It's a state of affairs that we'd love to get back to. I just would add, though, it took us 8 years to get from the global financial crisis to that tight labor market. It just takes a while, and so I think there are other tools that can help in the meantime, and those are really the fiscal tools. It's not a good strategy to be waiting, for unemployment to get really low again, although that will work ultimately. So that's the main thing that we can do. Of course, we also have tools where we supervise banks and to make sure that there isn't discrimination along racial lines and things like that. But by far the most important thing we can do is seek maximum employment, and in doing so, take account of all groups, all disparate demographic groups, and not just the headline number.
And what about the relationship between low interest rates and how communities of color do? What's that relationship like, and how do you see that?
Low interest rates support higher economic activity over time, and that supports lower unemployment, higher employment and lower unemployment. So, and it also supports higher inflation as the economy gets closer and closer to full employment and to full capacity. You'll see inflation rise a little bit, not a lot. So, it's a virtue that over time helps everybody. Now, in the short run, of course, if you're relying on interest on your bank account, it doesn't help you much there. But over the medium and longer term, it supports job growth and economic growth generally.
Thank you. Chair Powell, I appreciate that. And I hope that you will continue to look at how, keep workers, and especially low-wage workers and workers of color in the forefront as you think about monetary policy, as well as what we need to do on fiscal policy. So thank you. Secretary Mnuchin, I wanted to follow up on something that I wrote to you about recently. I've just received some information back from you late last night. This has to do with how the Treasury Department is working to get economic impact statements or payments, out to folks that are homeless. People in Minnesota are living, and all over the country are living in shelters and encampments and cars. In fact, there is a large tent encampment just a few blocks from where Archie and I live in Minneapolis, and those folks are not getting their economic impact payments. So could you just tell me what you're doing? You said in the letter information I received last night that you have some special tools that you're working on. Of course, I know about your non-filers website, but a lot of the folks that I'm talking to don't have access to that website. So what are you doing, and especially what are we doing with this deadline that's approaching in just a few weeks?
Well, as I mentioned earlier on the deadline, we'll go back and explore that and see what we can do. But I think, as you said, we need to help the homeless. I think the best way to do that is to work with community organizations that locally can help them and facilitate, obviously, for us to be able to do this.
And do you have any information about how many folks who are experiencing homeless have been able to get their checks? Do you know how you're doing with the results, what results you're getting?
On that specific issue, I'll follow up with your staff and try to get you some statistics.
Okay. That would be helpful because it's getting cold in Minnesota, and I don't know what's going to happen to those folks that are living that literally don't have a safe place to call home right now. Thank you.
Thank you. And I believe we have Senator Sinema with us by telephone only. Senator Sinema?
Thank you, Chairman Crapo, and thank you to our witnesses for being here today. While we saw positive job growth last month in Arizona, a significant part of those gains appear to be government jobs we knew would return, specifically Arizona teachers returning to schools. Private sector job growth continues to be slow, due in large part to the coronavirus's effect on business operations, consumer spending, and most importantly, public health. One of the emerging issues I'm watching is housing. According to the Census Bureau's Household Pulse Survey, over 300,000 Arizona families missed their July rent payments. 2/3 of those households are families with children. This experimental survey was last taken when Arizona was still providing a $600 additional per week of enhanced unemployment insurance. And now that that enhanced UI is no longer available, it's all but certain the situation has gotten worse. By way of reminder, Arizona's unemployment insurance tops out at $240 per week, the second lowest rate in the nation. When you can't make rent, you risk getting evicted. The National Low Income Housing Coalition projects that 770,000 Arizonans will be at risk of eviction at the end of this year. So Secretary Mnuchin and Chairman Powell, thank you both for being here. Have either of you ever personally experienced eviction or foreclosure?
I fortunately have not, but let me just say we do support rental assistance. I've spoken to Chairman Crapo and others, and as part of potential legislation, we'd look forward to working with you.
For me, just a no. I haven't.
Well, as you may know, I was homeless for a number of years as a child, and I wouldn't wish it on anyone. I know the challenges that Arizona families are facing right now, and it's an important perspective for people here in Washington to understand. When I was in elementary school, my dad lost his job and my parents got divorced. We lost our car and our home, and we were homeless for almost 3 years. We lived in an abandoned gas station without running water or electricity. Now, this might sound like an extraordinary story, but it's actually much more common than you would think. And it's something that millions of Americans could face in the coming months. Receiving a notice of eviction or foreclosure and having your home taken from you, being forced to abruptly pack up all of your family's possessions, not knowing where you'll go next. These are incredibly difficult and painful experiences, and they're hard to explain or understand unless you've been through them yourself. Too often, politicians in Washington understand evictions and foreclosures in strictly economic events. But in Arizona, we know that losing your home does more than hurt your credit. It does more than jeopardize your financial standing. It takes away your dignity. It's personal, and at times it can seem like it's impossible to get back on your feet. We have an interest in minimizing evictions whenever possible, but especially during a pandemic. While the CDC recently acted to halt evictions until the end of the year, this decision simply prolongs the inevitable without some sort of rental assistance for families. It shifts the burden, but provides no means of paying for it. And unfortunately, Arizona's rental assistance, which was riddled for months with delays and bureaucracy, is now completely out of money. Arizona's situation will go from bad to worse if we see mass evictions and record homelessness during a public health crisis. This housing crisis could also destabilize our real estate market, hurt retail businesses by further depressing consumer spending, and tighten access to credit, all when Arizona families and businesses can least afford it. So, Chairman Powell, if Congress fails to pass rental assistance and hundreds of thousands of Arizonans are evicted come January, do you anticipate that those evictions would have a positive or a negative impact on Arizona's economy?
Clearly a negative impact.
I agree, which is why I'm working with senators on this committee to provide targeted rent, mortgage, and utility assistance to keep Arizonans safely housed during these challenging times. Also working with industry partners and housing affordability advocates to build broad bipartisan support so that these proposals can be included in the next coronavirus relief package. As we work to get businesses in our economy back on their feet, and I'm pleased to have worked with a number of my Republican colleagues on these efforts, we cannot forget that families are struggling. We should have taken action months ago, and now the needs are more urgent than ever. Arizona families face tough choices right now, and it's time that Congress recognized these challenges and took action. Thank you, Mr. Chairman. Thank you, Ranking Member Brown. I call on us to find a solution for Arizonans and for families who are struggling across the country. I yield back.
Thank you, Senator Sinema. That concludes the questioning for today's hearing. Senator Brown has asked for a minute or two to make an additional statement, and then we will wrap up the hearing. Senator Brown.
Thank you, Mr. Chairman, for always giving me an opportunity at the end of the hearing to ask one more question witness and make a short statement. I first want to thank Senator Sinema for bringing up the importance of rental assistance. And as you know, we've asked for $100 billion, which probably barely, as the pandemic goes on, barely covers the assistance we need. I mentioned, and the question, Ms. Secretary, for you briefly, I mentioned an article about how small business was in ProPublica, how small businesses in Cleveland are suffering while big corporations benefit from access to cheap loans. Did you read the article that we sent you?
I did. I looked at it very quickly on the way up. I did not have a chance to read the whole thing, but I saw it briefly.
Okay, I hope you'll spend a little. I know that I know how busy I am. I know you are way more busy than almost any of us. I hope that you'll pay some attention to how risky over-leveraged companies can benefit from a government backstop while they lay off workers to keep prices up and to keep profits up and bolster their stock prices. I hope you'll read that and really take it to heart. Just a statement in closing, Mr. Chairman, and thanks to both Mr. Secretary, and I agree that both of you, I speak more obviously, not obviously, but I speak more to Chair Powell, but both of you are always responsive to members of the Senate and to our staff, so thank you for that. Secretary Mnuchin, you and the President of the Fed Chair all agree we need a large, aggressive, comprehensive bill to keep the economy working. We can't do it piecemeal. You know how this place works by now. It takes months to get a bill done. Families don't have that kind of time. It's been 6 months, as we know, since CARES passed. You and the President, Mr. Secretary, you and the President need to bring Republican senators to the table supporting your ideas and our ideas of a bigger package. Get your act together. Tell Mitch McConnell he needs to put, even if he has 20 people in his caucus that don't want to do anything, which Senator Van Hollen said, they need to put a serious bill forward. Because we will get all the Democrats to work with half or so of the Republican conference. If we don't get direct funding, as our witness last week said, with others, to the Republican witnesses chiming in, we could have another Great Depression on the horizon. The stock market does fine, but mainstream businesses and restaurants are shutting down. Black and brown businesses and communities are taking a huge hit for the second time this decade. Airline executives are doing well. Airline workers, as Senator Cotton said, are facing job cuts. We can do better. It comes down to whose side are you on, as you know, Mr. Secretary, Mr. Chairman. The administration, many of my Republican colleagues have frankly not seen the country through the eyes of workers, which is so important. And they haven't really tried. The House passed the HEROES Act in May. It's been June, July, August, September, almost all of September. The president should urge Senate Republicans to take it up or come up with their own comprehensive, not emaciated, not skinny, but comprehensive package to help all working families. Thanks to the two of you for testifying. Senator Chairman Crapo, thanks for your indulgence always and cooperation.
Thank you. And I've just been notified that one of our senators, Senator Kramer, may be joining us remotely and would like to have an opportunity to ask his questions. If you are with us, Senator Kramer, please let us know, and you may ask your questions at this point. It sounds like Senator Kramer has not been able to make that connection, and so we will conclude the hearing. I would just like to say, in response to Senator Brown and to some of the other comments that have been made, there is a commitment on the part of the President, on the part of many of us in Congress, to put a strong, fully effective relief package together. At this point, I personally believe that we have not had the willingness from the other side to engage in a reasonable package, and that the demands continue to be our way or the highway. And frankly, I believe that there are many items that we have already reached agreement on, or which we could reach agreement on very rapidly if we would take them up, if we had the willingness to simply take them up and do them individually. And so my hope is that while we continue to work on a meaningful, comprehensive package, that we also recognize that we need to act, and we need to act now. And there is a significant amount of good, solid relief that we can put forward rapidly if we can just get agreement to move forward to do what we can do and continue working on putting the rest of that package together. I want to know if those electronic sounds mean that Senator Kramer hasn't been able to join us. Senator Kramer, are you with us? All right. With that, then, that concludes today's hearing. For senators who wish to submit questions for the record, those questions are due to the committee by Thursday, October 1st. To each of the witnesses, we ask that you respond to those questions as promptly as you can. And again, thank you for taking your time and for all of the effort that you have put forward in our response to this coronavirus crisis. This hearing is adjourned.
Thank you, Mr. Chairman.
Thank you.
Thank you.